One of the big beasts, if you like, in the South African corporate sector with a long history and heritage, Murray & Roberts, the construction company. Full year diluted headline loss per share of R2.46. That was against a loss of 454 cents, R4.54 previously. Revenue is up 16% to 35.4 billion. The order book stands at 45 billion rand. The company didn't declare a dividend. The share price closed down over 1.5% to 21 rand and 80 cents today, reacting to that news. Now, for more, the Group CEO, Henry Last, joins us in the studio. Henry, welcome. The loss is better than it was. I mean, that's got to give you comfort, but it's still a loss and you're not in a comfortable place still.
Well, David, in my view, we had a phenomenal year, the past financial year. We refer to the past year as our recovery year. And we've made a lot of progress in achieving many of the objectives that we have set ourselves for this year. However, we were disappointed in the loss that we have reported. As you know, Murray & Roberts comprise of 5 different businesses, and 4 of them reported in line with our expectation. But the construction business in Africa and the Middle East recorded a big loss for the year.
You talked about recovery. What is that recovery? There are things to be fixed. You've got involved with some big contracts which have proved very complex. I heard someone say that there are thousands of specifications, for example, in your contract with the Gautrain, each of which could hold things up and lead to legal action and so on. You've got a lot of time. When you came in, was it a year ago? This is your second reporting. A lot of tidying up to do.
Yes, the recovery year was more about getting the balance sheet back in shape again. Our liquidity was really under stress about a year ago. We had a successful rights offer. We had a very successful debt restructuring. And we were able to close out the GPMOF project in the middle, or in Western Australia. And there's very little work remaining on that project. It's primarily snag work that we're busy doing. So if you look at what we have achieved during the year, we're very pleased with what we have achieved. The disposal of assets also went pretty well. The discontinued businesses were disposed of, the steel business after year end. So it's a post-balance sheet event, but we're very pleased with the progress that we've made there. But I think most significantly is the fact that the loss-making projects that were really impacting on us over the past couple of years, we believe they're largely out of the system. The remaining risk that we see for the group in the current financial year is Gautrain. We still have the dispute on the water ingress between ourselves and the province, and that will be resolved in the final quarter of this financial year. And depending on the outcome, there may be further costs to be incurred. But apart from that, we're very pleased with where we are now.
I've heard from someone who has travelled on the Gautrain to Park Station. They couldn't find any water at all. So one doesn't know if this is water that's condensing from cold air on the mornings, and if this is a minor technicality. But Mohammed, you've got a question for Henry.
Yeah, I think, Henry, these are the disputes. I think that's on investors' horizons or on their radars, and they're aware of that. You mentioned Australia in your results today, and what about the hidden risks? When you look at Australia, I just saw today, lots of talk. Australia as an economy intrinsically linked to China and the slowdown we're seeing through in China. What are the risks that are not yet on investors' horizons that are looming in your mind for the business over the next 12 months?
Well, I think when you look at Australia, the comment is more about the minerals market, and BHP has commented on that, talking about major cutback on several projects. However, our exposure is primarily to the oil and gas market, and there we see that there's still strong demand for our services that we provide. And as you know, these oil and gas projects, they only get built once the supply agreements are in place, and these supply agreements covers 10, 20-year periods. So we're quite pleased that we will, at least for the next couple of years, have a strong ongoing growth as far as our business in oil and gas is concerned in Australia.
Yeah, just, banks write credit, insurance companies write insurance, construction firms write contracts. And if you write any one of those bad, it shows up. And beyond the benefit construction gets from the cycle, what have you done to ensure that never again shall this happen? Should you have misconstrued contracts, bad debts, and payments, and because you wrote bad credit? And this is for a company that's been around since a long time ago.
Yeah. Look, I think it's impossible for anybody to really give a guarantee that you will not have a problem project in your future. But for us, it is the important thing is to make sure that you actually don't have that in your portfolio. And the way to go about it is to make sure that when you engage the opportunity, that you have a commercial arrangement in place which is suitable for the risk that you engage.
Does that perhaps raise the question, Henry, that you rushed into it? You know, there was this massive project, the Gautrain, very exciting politically, socially, from a transport point of view. There were the views that it would be a white elephant and it was only for the rich and so on. I remember Carl Grimm of Avenge, one of your counterparts, the big companies in South Africa. He was CEO then. And I asked him when that contract was awarded, 2005. And I said, what about the Gautrain? He said, it's okay, we don't mind not getting involved with the Gautrain. Did you rush into it? Were you too eager to seal the deal and then rush to get going because there was a deadline of the 2010 World Cup?
Yeah, I don't think it is really about that. And we will only be able to close the books on Gautrain once we have resolved all our disputes. And those are substantial. The delay and disruption claim, I've said previously, it's not hundreds of millions, it's billions of rands. And once that is resolved, we will be able to really reflect on the full performance on Gautrain.
But to follow Schleler's point, Henry, you know, a few thousand, 100,000, perhaps 1 million or 2, but as you say, billions. I mean, that suggests a lack of grip by the company or the relationship with the partner, the state.
It's not as much a lack of grip. It is basically on major projects, circumstances change. And on any project, the first day you're into the contract, things start to change. And unfortunately, in our view, we were not given the land in the same sequence at the same time as was required in terms of the construction program. And as a consequence of that, the construction cost in this project was just far higher than what we allowed for in our tender. And that is the basis of our claim. However, having said that, when you have major claims on major projects, it is not all that easy to resolve. On small projects, you get around a table, you come to a settlement and you move on. But if you do a project in the public sector, there are different processes around resolution. But in the meantime, you do have the obligation to complete the project, and that we have now done. But unfortunately, working capital outlay is there, and we have to resolve that.
Any more comments there from Schleler?
Perhaps one of the problems is the incentive and the compensation. A lot of times incentives are linked to growth. So you could look at growth of order book and growth in earnings, and are the incentives now linked to the adverse impacts of doing business versus the positive impacts? So are they linked to impairments as a percentage of your book, or some of these claims as a percentage of sales? What are the incentives now going forward based on?
Which incentives are you referring to?
Incentives for your staff, for people that write contracts,
for
execute,
well,
for executives.
For us, there's basically, from a financial point of view, there are three measurements which are important to us moving forward. That's the net cash position in the company. Return on capital employed is very important, and then also the profitability.
It was Carl Grimm I mentioned earlier that he was the one who said there's one ratio that matters in construction. You know, it's a big business with lots of big amounts, contracts which end order book to revenue rather. That's the ratio that counts, because your revenue from a particular project ends, huge revenue, but if you've not got one lined up, or if you've got too much lined up, you're in trouble. How does that sit with you now, prospects for the company?
I think that is an important observation. And Marion Roberts' order book, 45 billion at year end, and we believe it is a quality order book. It is about 10 billion down on what it was last year this time, but there were three main events which contributed to that. Firstly, we had the termination of the Aquarius contract, and that was 7.5 billion in terms of the order book. And then some descoping on the Itachi contract that we have on Medupi and Kusile in the order of about 6 billion. But that was partly offset by an 8 billion increase in our order book in Australia. So those three events really contributed to the significant movement. But we are pleased with the quality of the order book, and 45 billion is not where we would like to see the order book. But as I say, there were these large events which contributed to the reduction in order book, and we will build it up from 45 billion moving forward.